we have a slate of awesome speakers here today and only 30 minutes, so I think we're going to jump right into it. As introduced, we're going to focus on the FX component of Project Guardian. But I just wanted to comment first that when we talk about tokenization, tokenizing cash in the form of remittances and retail payments had been all the rage for a number of years to talk about. And certainly it's still something that's being discussed. But I think increasingly we find ourselves in these kinds of conversations where we talk about the impact on Treasury and cash management and kind of much bigger volume, different kind of question. And actually discussions like Treasury management, I think a number of years ago, if I said that to the average person at a conference, they kind of look at me like, huh? Like, why are we talking about that? Like, who even knows what that is? So I'm really excited that it's now kind of the center of the conversation. So let's talk commercial use cases in the FX market. I want to start with John first to kind of talk to us about why this piece of Project Guardian is very important, kind of what the objective of this piece of it is, and why you're so excited by addressing Treasury management here.
Yeah, so thank you, Jess, and thank you everyone for making the time to attend. I think, as you said in the intro, Jess, this can seem almost like quite a dull subject. It's a subject where people will ask, why is this interesting and why is it such a key part of Project Guardian? Treasury management, let's unpack what that means. I think it means different things at different institutions, but one way we conceptualize it at HSBC, and I think at some other banks as well, is we view treasury management as several things. So it's payments, very obviously. It's foreign exchange, as Jess has said. It's also trade finance. And overall, that set of services at HSBC, we tend to group that under a concept we call transaction banking. And that serves a lot of different parts of HSBC. We're obviously extremely global. We have a diverse set of businesses, and that activity is central to a large number of those businesses. The reason we're so engaged with Project Guardian, and obviously there's many different elements of Guardian, and I think, as is typical of Singapore, it's a really effective attempt to be a thought leader across a whole range of subjects related to one of the themes we're seeing across capital markets, which is asset and payment tokenization. But the reason HSBC is so engaged is those businesses are very important to us. But what we think the overall promise of tokenization within that perimeter, as I would think of it, there's lots of significant benefits. But for me, the standout benefit and the reason we're really so engaged is it offers the possibility of more rapid payment and settlement finality. So I think on this panel we'll be mainly talking about payments and completing payments in a more rapid manner with legal finality. But that also ties back to a wider conversation, which is about digital assets and tokenization. And we think digital money and the different forms of digital money that we're talking about within this part of the Guardian conversation, they're a really important enabler to unlock the power of digital assets. Because at the moment, HSBC and many other institutions, we've created issuance platforms and transaction platforms for digital assets. Ours is called Orion. But we really think for those platforms to fulfill their full potential and for the market to be liquid, we need effective forms of tokenized and digital money. And for me, that's one of the big themes within this part of the conversation.
Awesome. Thanks, John. Let's go to Kevin next. Let's get a little bit more detailed. Can you share with us some of the use cases that this particular work stream of Guardian is pursuing, and kind of how far are you?
Yeah, absolutely. So first, I just want to thank all my panelists for being here and for everyone in the audience, and to Guardian for hosting this wonderful forum, and for SFF for giving us the chance to talk about this. There's 4 main use cases that we're focused on within the FX workstream right now, and I'll obviously invite my other panelists to discuss some of them, as their institutions have been leading a lot of them. But the first one is really focused on something that we at BNY talk a lot about with our clients, which is real-time treasury and a focus on just-in-time funding and more efficient cash management, right? And so that's really using tokenized deposits to facilitate more efficient use of capital across global entities. And in doing so, and in crossing all of those global entities that a company may have, you're inherently going to run into currency challenges, right? You're going to need to be able to instantaneously swap one currency for another, so that when you deploy that capital globally and you have a more efficient use of your working capital, you have the right amount of money in the right currency, in the right entity at the right time. So that's one. The second is focused on FX swaps and then investments in money market funds. So obviously, if you think about a corporate cash manager and their desire to gain yield on perhaps more idle cash or cash that's not been deployed, you need round-the-clock treasury management in a real-time 24/7 world. Today, you're limited by certain factors like operating windows for money market funds, the ability to subscribe and redeem to those funds. And this use case focuses on going from a currency that might be at a non-USD entity into US dollars and then invested into a US dollar money market fund. And doing so in one single kind of fell swoop, right? The processing and the transaction flow is highly efficient. The third is focused on PVP efficiencies within DLT-based networks. So creating new blockchain networks and kind of centralized. I don't want to say overly centralized because that's probably a bad word, but a centralized place to make PVP operations more efficient. The last is one we've focused on at BNY with one of our partner banks, OCBC, which is blockchain interoperability. For us, when we look at the corporate cash management space, we don't see a lot of singularity or harmonization, right? There's very few corporates that use a single bank. And so as a corporate may have 5, 10, 15, 20, or on the large end of the market, over 100 different banking partners, we think it's critical as tokenized deposit networks pop up at individual financial institutions for us to be able to go across chain and transact for our clients. Because if they are looking for that just-in-time funding, for that more efficient use of working capital, we need to meet our clients where they are and on the infrastructure and banking partners that they choose to use across any region. As far as how far along we are on some of these, look, I think some of them are very real and live, and I'd invite Kelvin and John to talk a little bit more about that. We did an experiment on the interoperability side last year. We certainly want to advance some of that work in the years to come. And on the money market fund side, I think there's a ton of promise there. You're obviously seeing a lot of tokenized funds launched in recent times, but we still do need some market structure change there to make that available properly on a 24/7 basis.
Awesome. So perhaps we'll flip to you, Kelvin, to talk about some of those. Also, looking at it, Ant makes particularly a very interesting model, perhaps possible in the region. And I'm very interested to understand kind of what compels you to focus on this space and how Ant is thinking about it.
Yeah. So my name is Kelvin. So I run the Treasury infrastructures of Ant International. So we actually represent the use case number one, Kelvin just mentioned, so global treasury and cash management. It's actually all started from use cases. I remember about 5, 6 years ago, I got a lot of internal pressure that my product managers wanted to launch products which need 24/7 instant liquidity. For example, VAT refund, tax refund in travel use cases. Right? We actually know in the travel use cases, you normally need to go to the airport, put on a long queue to get tax refund into your card. That's the normal experience. I don't know how many of you have gone through that. And we wanted to launch a product which allow instant tax refund into e-wallets, into their local currency. For example, a Chinese or people from Asia to travel to Europe. Right? So these will require an instant FX and instant liquidities 24/7 services between Europe and Asia. Some other use cases including SME payment. We serve a lot of merchants who are active on Amazon and other e-commerce platforms. When we did a customer survey, we are very surprised to find out that around 40% of transaction is happening in non-banking hours. Well, how to support them? So many of you probably are not treasuries in the company, in your current role, but let me share with you. Even the largest banks, probably on the street, you cannot actually move money between two companies or two locations after banking hour. For example, at 7 p.m. Hong Kong time or Singapore time, if you want to transfer $10 million from one legal entity to another, sometimes even within the same branch, this cannot be done. So for those who in the digital economy, This is not acceptable. This will result in a lot of pre-funding, a lot of premium on FX to be charged to you. So about 5-6 years ago, we start to use blockchain to link some major banking partners and start to talk to them about tokenized deposit. So with the launch of Project Guardian and some other regulatory project which allow us to do tokenization in the regulated framework, we started to equip a treasury infrastructure with token. So nowadays, about 35% of my treasury, global treasury activity are now happening on these treasury platforms. We process over 300,000 transactions on the blockchain platform. So it's not a POC. It's actually a scalable adoption nowadays. It helped us a lot. Firstly, it helped us to reduce greatly our working capital by around 60%. The pre-funding that we used to need to put in all payout accounts can be greatly reduced. And secondly, on the FX, the cost has also been reduced. Let me give you a number. So on the non-banking hours, if you wanted to trade FX, for example, on weekends, if you do a cross-border payment, you travel, actually FX is covered in the customer side, but you have no way to square with the bank. This time, you will pay 5 to 20% of premium that you normally paid on a banking hour. For example, from 1 to 2 base point to 5 to 20 base point. The on-chain tokenization helped us a lot in the treasury management to reduce working capital, but also reduce the cost of FX. So through Project Guardian, so with these old friends that we worked for a year, actually built up some framework, especially Easter, helped us to put on some Easter provision, which we may be able to do this in a scalable manner, which allow us to serve our customer much more efficiently, and also allow us to create some product which cross-border payment can make cross-border payment cheaper, faster, and more transparent. I think that's our experience.
Well, Kelvin just introduced our next speaker for me, so that's fantastic. We'll get Scott in here to talk about ISDA's very key role, and I think the key word that you said is scalability. So how do we turn some of the learnings that will come of this project into kind of longer-term standards to support the industry?
Actually, Kelvin did set it up nicely. Scott O'Malley with ISDA, the International Swaps and Derivatives Association, and we support, through definitions and legal agreements, the FX market and all derivative markets. To give you a perspective of how big this market is, and make sure you understand how big this market is. It is $7.5 trillion yearly turnover. 50% of that is a swap, and roughly 50% of that is with non-bank entities. So it does go to the end user. So this is used globally. It's used 24/7 or near 24/7. So it's really important that we continue to maintain that scale. The current system does have some shortcoming, but we can, that's what the goal of the technology is to improve that. What we need to do is make sure we have good standards. We start with the legal definitions and the standards of the product itself. We want to make sure that we have a good legal understanding, and you also have to think about when things go wrong. If there's a default or a failure to pay, what is your recourse? That also needs to be captured and included in this. It's not something we like to contemplate or talk about, but that's the safety and soundness portion of this. I'll give you an example of why legal standards have to happen. And in the previous panel, set up the regulatory paradigm. When you think about when Russia invaded Ukraine, there was a whole bunch of sanctions. That means cutting off the Russian ruble. All of this has to be dealt with in the international framework. That's what we put in the document, so you have a proper fallback, so if things do go wrong, if there are sanctions. We're in the process of updating the FX definitions in our working groups today. You can join those working groups if you're an ISDA member. And some of the things we're working through is making sure we digitize the documents and make sure that they're a golden source of information, constantly updated. We have those fallback provisions. We address calculation agents. There is a lot of detail and specificity in this product, in every product, and the details matter here. So it really is, many people are coming at this from top down. We're definitely coming at it from bottom up, and we're going to grind out the details because they really matter. And we want to make sure that we scale this so everybody can use it at at the scale we use it today.
So I'm going to focus on grinding out the details. I think the digital asset space for years, perhaps the last decade at least, has really been plagued by the words taxonomy and definitions. And I can personally speak to trying to come up with a taxonomy for the digital asset space while at the Treasury Department in 2018, which was pretty much a worthless endeavor trying to do so. So I'm very curious.
We've only been at it for 40 years, so don't take it personally.
Right, exactly. Well, I'm counting on the 40 years of experience. So I want to turn back to you first to say, essentially, how do you do this for a space that's going to keep evolving and need to be flexible, and how do you get agreement on those things? Because from my experience, the words taxonomy and definitions lead to nowhere.
Well, we have a strong baseline. We have well-defined products, whether it's FX, credit, equities, interest rates, commodities, where voluntary carbon credits and compliance credits. All of these are definitions we use, and they're paper-based. And our goal is to make sure we transition that to a fully digital solution. We have to have a digital representation of this. We have to make sure that it's constantly updated so people are using this and tapping into it. The paper-based is not sufficient. It used to be, you'd look up in a booklet and then we'd have amendments to it in the future. That doesn't work in digital. We have to make sure that it evolves with the market. The other bit is, we both work for trade associations, and the secret sauce to a trade association is convening the membership. And the membership are the users of this. The users of this worldwide. And having everybody around the table. It is not particularly fast, but it is, the consensus basis does give us the result we need for everybody to use it. So all the firms here use those interest rate definitions, they use the FX definitions, and they can count on it. You don't have to renegotiate that every single transaction. You count on it, you do your deal, and you move forward. And that's what gives you the scale. We also work on legal documents and legal certainty in jurisdictions. That also brings confidence and allows banks to intermediate and provide liquidity in those areas. Not having good legal standards will wreck your economy, and it'll wreck your trading liquidity as well. So that's also table stakes as well. And then I think the operational standards is kind of what we're working on now.
All right, well, good words to live with. Kelvin, let's go back to you. Let's come down a little bit from a big global perspective, a little bit more to the regional perspective. In terms of the work that's being done on this project, what do you think about it is really being catalyzed here in Asia, and why is it able to be catalyzed here? And is there anything kind of blocking it from becoming more global faster?
I think there are probably a couple of reasons that these changes probably, the adoption will likely to firstly happen in Asia. Firstly is because the use case. So digital economy, digital payment, I think are more penetrated in Asia than many other states, many other continents actually. So what the use case that I'm talking about, driving people to Treasury to work around the clock, driving people to make shopping online, to make all these digital payments around the clock happened a lot in Asia, driven by e-commerce, and then mobile payment, and then ultimately to the tokenization and the needs in the Treasury on payment infrastructures. So for example, in FX, in US or in Europe, a lot of currencies are traded 24 hours. Right, so the trading hours is normally 5.5 days a week from the opening of Australia to the close of New York. Well, in this part of the world, for example, Southeast Asia, most of the currency are having some degree of currency control. They trade 6 hours or 8 hours a day, but not 24 hours, meaning the discontinuity of financial market happens a lot more here. Well, you have more penetration of digital economy. Think about it. Managing cross-border payment and managing treasury infrastructures for it is much more challenging. So the use case is driving us towards more adoption, the pain points. I think, secondly, I think it's because the companies here are more into the adoption rather than POC. We have done a lot of POCs in this region. I think when I talk to the people around me, we are thinking about how to transfer from POC to progressive adoption. Okay. The adoption itself been evidenced by some regulatory projects. For example, Project Guardian here, we actually piloted cross-currency, right? And then in Project Ensemble in Hong Kong, a few weeks ago, we talked about cross-institution movement. In fact, the current state of tokenization, my understanding, is in a state that the basic tokenization technology is become a common knowledge. A lot of POC project has been done, a lot of white paper has been done. It can be done in most of the firms. The remaining challenge will be in three aspects: cross-currency, cross-institution, and cross-blockchains. So if we solve these three issues, I think there will be some turning point or tipping point that token can be used a lot more in the day-to-day treasury management, cash management, and cross-border payments.
So let's go to John next. You've certainly done a lot of projects, POCs and beyond. So how do you take this? How do you scale it globally? How do you ensure that investments that you're making in some of these learnings don't just get captured in a regional context and get out there in a bigger, scalable way?
Yeah, thanks, Jess. I think the scaling point is a fantastic point, and I'm happy to be very explicit about that, the way we see that at HSBC. We've certainly done a lot of experiments. We've done a lot of projects. We're in a lot of sandboxes. But one thing I say a lot is I think for this subject, both across payments and assets, is to some degree there's a bit of sandbox fatigue, right? We've been talking for several years about lots of experiments, what we can do. And I think therefore the pressure from investors, users, maybe many of you in this audience is, come on guys, get on and do it, right? Deliver real solutions. And the key for markets, whether it be payments, assets, any parts of global markets, is always liquidity. And I think the promise of this subject, if you break it down to its essential elements, is increased liquidity. But as I said, we haven't seen that yet. There's actually relatively few transactions. Kelvin's given some very good examples. Many of those are within sandboxes. On the asset side, as I said, we issue digital bonds, we issue tokenized gold. We've seen real activity. And our commitment is to drive liquidity within those markets and make them as usable by those who are interested in fixed income or gold, to use two examples, as any other assets. But actually, I say as usable as any other assets, but they have to do something better for people to adopt them. And I think the thing that they can do better and are doing better already at small scale is, as I said, completing asset delivery and finality of payment on the same day. And I think actually with payments, in many people's perceptions, that seems completely unremarkable because, Jess, if I send you $100, it will pop up on your phone within a few seconds. It looks like the payment is complete. But as I'm sure many of you know, but maybe the general public don't always know, that's not the case at all. Actually, my bank has debited me, it's credited, another bank has credited you, basically on trust. That payment needs to be settled tonight via an RTGS, via a central bank. It's actually an overnight transaction, finally, although it doesn't look like that. And there's a lot of effort to make sure it doesn't look like that, because that would seem very suboptimal. If you look at the way assets settle, many assets, somebody on the last panel was saying T+20 for loans. We've done government bonds on our Orion platform, which classically would settle in 5 days. Nobody wants to settle assets in 5 days. So we brought that down to 1 day on our platform. So that's a benefit and a journey we can make. But we think tokenized cash, which is our subject today, can really support that activity. And we definitely think for some issuers of assets, they're going to want to settle same day, which seems unremarkable, but is a real benefit and a really exciting benefit. And I always say the journey from T5 to T1 is actually shorter than the journey from T1 to T0. That's a really profound benefit. And the reason it's a profound benefit to settle things the same day is you get your money back. You can trade again, right? So I transact a bond with you, Jess. If the settlement is done almost instantaneously or same day or maybe at 4 o'clock today or whatever time we deem, then you can trade again at 4 o'clock. And so what you see is market velocity accelerating. You see more liquidity. And for me, for this entire subject to be worthwhile, and I think it very much is worthwhile, that's why we're so invested at HSBC, you have to be adding more liquidity to markets, whether they be payments or assets. And that's the next horizon that I think we're coming up to now.
All right, so let's go back to you, Kevin. There are numerous different POCs, projects, pilots, you name it, right, going on out there, and that you've been involved in, that many here have been involved in, many in the audience have probably been involved in. How do we take industry's investments here and make the most of them so that we don't end up with lots of just different projects? I think one of the questions that's out there is, are we going from really global models to ending up with a lot of more kind of regional pods of models in the future? Or can we bring all these things together to kind of agree on the best way to use industry's resources? And then I'll combine this really quickly with one question from the audience, is essentially take this and connect it to how is this good for the consumer at the end of the day? It doesn't just benefit the financial institutions, but how does this translate to the consumer being, benefiting?
Sure. So maybe I'll start with the first set of questions and get to the consumer at the end.
A big slate, yes.
Yeah. And I know we're short on time here, so I'll try to get through this efficiently. Look, first and foremost, forums like Guardian provide the opportunity for all of us to come together, not just as financial institutions, but also with clients, regulators, industry associations that set standards to start operationalizing some of these things. And to be sure, that's taken some time, right? I've been in the space since 2017, and at times it's felt like doing the same thing over again or having the same conversation. But I think the difference this time is there's an earnest focus on client benefit, right? When Kelvin and I are on one of these meetings, we're not speaking so much about, the interest in the technology, the different models for it. We're talking about how this benefits Kelvin's business, how it benefits our client's business, both on the bank side from an infrastructure perspective and also to our end corporates. Right? And so I think more forums like Guardian can help us, centralize around a single problem to solve, because where I think we may have fallen short in the past is trying to do too much at once, trying to change technology, market structure, economic incentives, and that becomes a lot for institutions to bite off. And I think what you'll see is a continued focus on interoperability, both, we've heard it on this panel, but also on the prior panel, that cash leg of the asset transaction that they were talking about. If we think about how our payment systems work today, they do tend to be fragmented, right? And so trying to holistically change that in one fell swoop while we're also thinking about new standards, while we're also thinking about new business models, it's just very difficult. So taking a pragmatic approach through forums like Guardian is helpful. I think I covered most of the first questions with that one, but on the consumer side, look, I think it's all about the end consumer experience and the trust that they have in certain institutions. You may want to or be comfortable with using a fintech for certain transactions that might be lower value, but when you think about sending higher value transactions, to John's point, it's really an overnight transaction and you have some settlement risk involved in there, particularly in currencies that aren't covered by CLS if we're talking about an FX transaction. The end consumer should be able to trust that financial institutions can provide the same or a better experience to them that some fintechs do. And really, it's using technology as a tool to provide them that experience and to regain their business and drive more flows.
Well, perhaps we'll go one final comment to save the day here, John, on how are we going to benefit consumers? Because I think this is really important.
Oh, I was going to make a comment about something totally different, Jason.
Well, now you're on the hook for both, so you better get busy.
No, I was going to say, I think we were talking about the differences or the interactions between regional and global, and I think that's very important. I think if you look at payment volumes, to Kelvin's point, over the last 10 years or so, it's very clear that global payment volumes have been driven within Asia and in and out of Asia. So there's a clear regional trend there. But if you think of, we're talking about transaction and treasury management, there's a link to FX, as we've all said. So the majority of those transactions will have a leg into US dollars. So that's global markets already. And then if you think of where those transactions are located, they're located in many, many different global financial centers, including Singapore, but the biggest single location will be London still. So already what we're talking about is really important regional developments, and Asia has very specific developments, but within the context of global markets, and we think keeping that global perspective is really important. Jess, you've asked me about the benefit to consumers. I think the benefit to consumers, listen, I've said it already, is liquidity. So if you're a consumer, you care about two things. Any market counterparty cares about two things. Getting the best price and being sure that your deal is done. Those are the things that everyone's always cared about in financial market transactions. And I think if we have the liquidity development, which I've already highlighted through this technology, and we have more rapid settlement finality, that's a benefit to consumers because they get a better price more rapidly.
Well, there you have it. Final word. We'll wrap up the panel. Thanks for being with us today. We'll move on to our next session. Thanks so much.
Thank you.